You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the Option Block, a little program we like to think around these parts. It's your favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you're just joining us now live for the first time here in 2017, welcome. Where you been? It's been a decade, but hey, we welcome you nonetheless. And, of course, a lot of great programs you guys check out. In addition to this one, of course, the easiest place to do that, just subscribe to our main network feed via wherever you get your shows, iTunes, TuneIn, Stitcher. And if you're on those platforms, you want to leave us a nice glowing 5-star review, maybe you just overlook all the things the Rock Lobster says and you go 5-star, that's fine. If you don't, that's fine too. But it's always nice to have a little bit of love over there. Even though if you want to leave us feedback, like immediate feedback, like a question, don't do it in like the iTunes store because we don't get over to check them as often as we should. So if you have like, hey, should I buy these puts that expire next week? Maybe you hit us up via the usual outlets, the social medias and the website and all the other fun stuff. All right. And of course, you can always grab our app as well, iOS, Android, and the Fire OS. And joining me on the old program today, let's welcome him back from the hinterlands of Texas, where he was lost. He was lost in the scrub brush of Texas, but he finally found his way back to civilization. He is back in his beloved Maine, none other than the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
It is a pleasure to be back here, although I believe I got slighted again in the opening remarks. So I'm feeling, I have to say I'm going to have to invoke the U word, because we weren't even like a minute in.
You're gone for a week in the hinterlands. A little umbrage is bound to accrue. It's like an escrow account. We're just building up interest over here in terms of umbrage. And also joining us from, I did not know this till recently, listeners, the former pickle capital of the world. Yes, we know it's paradise on earth. Now we know it also was at one time the pickle capital of the world, St. Charles, Illinois. We are joined by Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. And how are those pickles tasting?
I don't even like pickles, so I guess, so I guess they're good, but, my hometown doesn't have the authority to claim such a title anymore, so I guess that's just the way it is.
Just shows the man conspiring. How can you take a title from the paradise on earth that is St. Charles, Illinois? I say umbrage to that, sir. I mean, more titles for St. Charles, not less. That's what I say. And I think more trading for us as well here. So let's get right to it and dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. A bit of a quiet one, at least close to close here on the end of the day here. Today, most of the major indices closing effectively unched on the day. The Dow probably leading a little bit of a light laggard crew off about 0.3% to the dark side, but that's really the only activity really worthy of note. Even the VIX cash effectively unched on the day today. So not a rock'em sock'em robots day, at least for this week. Maybe saving up some irons in the old fire. That said, a few products were lighting it up. VIX options doing actually about nearly 750,000 contracts today. So there was a little bit of action in some surprising pockets, but net not amounting to much there on the day. Of course, it's an interesting time. We are leading into, of course, next week, the 20th. A big date marked on everyone's calendar. That was, in fact, the big topic of a conversation at the big STAC, the Security Traders Association of Chicago conference, where I spent much of the week and indeed much of the day today, and where I was fortunate enough also to be dragged knee-deep into the weeds on a panel about all things Dodd-Frank. Yes, it's as sexy as it sounds, listeners. But it was fun. Maybe we'll get into some of the talking points that came out of that event in a little bit. But first, let's check in with my cohorts who were not at such an event, so they were able to stay glued to their screens all day long. Let's start with you, Uncle Mike, out there in the pickle capital of the world. Former umbrage, I say. What caught your eye in today's activity, or perhaps lack thereof, sir?
Well, it went down and then it kind of came back. I think that what was interesting was that when earlier in the day, probably maybe around 10 o'clock Chicago time, market was down probably about 15 points below in the S&P where it closed at. And I just remember it seemed like everyone was saying, oh, this is just negative reaction to the Trump news conference yesterday. Well, if we were going to have all this negative reaction to it, then why didn't it just tank right afterwards? I mean, it went up and down during, but why didn't we have this tanking, so to speak, yesterday? So that was one interesting thing that I saw today, because in SPY we closed at 226.55. We were about $1.50 below that at the low of the day, around 10 o'clock today. So we got some buyers coming in towards the end of the day. So I think it'll be looks like we're just kind of in a holding pattern right now until we get some of the earnings, which of course we'll talk about around the block as well. Other things of note on the day, we actually have the biotechs had a little bit of a recovery yesterday. This actually was something that happened with the Trump news conference yesterday, him saying how the pharmaceutical bidding process is just not fair. And then IBB initially just took it on the chin right afterwards, but had a little bit of a recovery today, not too much of one. Full disclosure, we do actually have a minor position in IBB, a collar one, and it actually kind of worked out okay for me because 280 was my short call position. I was thinking about if I wanted to roll up or not, but now I get to wait it out a little bit more, so that kind of works out well along my line. So thank you, Mr. President-elect, for that one. Other than that, there's not a ton of large movements that really happened today on a lot of the things with which I watch. Apple, I know everyone wants me to talk about Apple. It's down a little bit, but nothing too crazy. We had XLE down. Maybe I think I'm showing 31 cents, so not a ton of activity, but I think it's going to be interesting to see over the course of earnings coming out. New president coming in who vows to, as soon as he's inaugurated, is going to go right over and sign a bunch of executive orders. We have a lot coming up, I think. There's going to be a lot of action coming, but not a lot today.
Before we continue, I do want to say I withdraw my earlier statement. I've done some research into the history of St. Charles and discovered you called yourselves a pickle capital of the world, but nary a pickle was made in your town. There was just a pickle marketing agency, which who ever heard of such a thing? So a pickle marketing agency slapping that title on your town. This is one of the rare times where I approve of some punitive sanctions against St. Charles. For shame, sir. What are you guys doing out there? Not making pickles, pickle capital of the world.
We're the pickle capital of the world.
Pickle marketing capital of the world, perhaps.
We are well, it's not even a title anymore, so you want to rub salt in our wounds, then so be it.
Did you guys come up with that stork on the pickle jar there? Is that what you guys did? Is that your claim to fame out there in good old, the facts of St. Charles just keep rolling on in.
You're just mad because Donnie loves Jenny doesn't isn't filmed in your hometown. It is in mine.
True. That's true. We don't have that claim to fame. Save us, Mr. Rock Lobster. Now that you're back safe from the hinterlands, the outback of Texas, you're getting chased by dingoes, all that fun stuff. I think they have those in the Panhandle, right? What else? What's catching your eye in today's activity, sir?
Dingoes. I was on a very civilized lake that was totally ringed with homes. And
dingoes somehow. Crazy how that happens.
And dingoes. And there's actually crocodiles and water moccasins in the lake, but apparently they do not go where people go. Mostly because they probably have speedboats and they don't want to get run over. That being said, what did have a move today was, I think VXX was up 5% today at one point. If you start the day at 2140 and you go to 2250, what is that? $1 move, right? $1 move in a $22 stock it's not okay. Let's call it 4.5%. That's kind of that was not a nothing move. As we kind of had that early sell off, and it was sort of I think I'm channeling Red Fox. I'm coming for you, Elizabeth. I'm coming, Elizabeth. I'm coming. Like the market's gonna then.
Wow, no one under 52 got that reference at all, sir.
No, I know, but the death of a great comedian. Very sad. Anyway, so
we're hitting the millennials here hard on this show. Red Fox illusions. What else you got? You got some All in the Family stuff next?
I might. Well, when we're talking about a meathead, maybe I'll bring in some All in the Family. But and then VXX, I did act like a meathead. It promptly, all of a sudden, the sell-off just stopped. That's it. And the bid for vol went away, and it left as fast as it came. So I think VIX at one point, did it trade $13 today? I think it might have gotten like maybe $12.75. It got up there. I like 12.5. All you can muster is a 12.5 VIX, and I swear this is like trading in the 90s where, whoa, we're getting into the 12 handle. Oh, we're getting to the 13 handle. Oh, we might get to the 14 handle. Then sell it. I mean, it's that's what trading was like in the 90s until the end of the 90s when things just were moving so fast and so crazily. It was a whole different market. But it's where, you have these rallies and then it goes away. So the rallies and vol and then goes away. So VXX actually made quite a round trip. So, 4.5% move, that's what, 75% vol, something like that. Options are priced at 50% or 60% vol. So it is still, it seems like I thought the volatility in there was very cheap. So we did a little something in there in our chat room today, which worked out okay. But it was when VIX is slow, it's always can hair trigger up. And it did so today. I mean, that was the big move. Besides that, I think Fiat went the way of Volkswagen and had some sort of software snafu.
Snafu. I like how you term that. Oh, it was just accidental that we somehow amazingly defrauded people with our emissions.
Exactly.
Such an
really
accident.
Cool software to just lie to everybody.
We didn't mean it for happen when you plug in the emissions thing that it completely routes to a different system and gives you some fake numbers. That was an accident. We never meant that. Again, that was the Volkswagen thing. I don't know the specifics yet of the new one, but I'm guessing it's a similar vein. Seems to be all the rage in diesel and emissions land these days, just to game the system like crazy.
That's what it sounds like. So we can discuss that in the unusual activity. But I mean, that was most of the action. Stuff that, one stock that has looked really good lately is Tesla. Even though I guess Elon Musk is the survivor of all survivors, so don't count that guy out. But it's not at its all-time highs, but it's made a nice little bounce since the election. That kind of held up well today. Today was kind of a day of the favorites, I think, that they just sort of did okay. That's where, and then of course, Amazon was up $15 because it's going to take over the world. So I guess Amazon is just going to sell everything to everybody and all of the retails have to just go pound salt.
I don't know if you heard, but they're going to employ pretty much everyone in the planet coming soon. They announced 100,000 new jobs going to put on over this year. By the way, you missed Monday's show. Mike and I were talking about an interesting index. It was a Death by Amazon index. I forgot the name of the firm that put it out. They pretty much had all these brick and mortar retailers who only sold third-party brands and how just terrible they were, and they were getting crushed by the Dow, like 275. They're underperforming by ridiculous percentages. So it was a pretty funny idea, I thought. For an index.
Yeah, unless you have customer service, like real customer service, like Best Buy has tried to do, which of course, that was one of my wife's favorite stocks. Now it's doubled since then, and she laughs at me. But other than that, unless you have real customer service to offer, man, it's going to be a tough road out there if you're a retailer. You better give them something. It's not just selling the stuff anymore. You got to sell the stuff and give them a goodie. So.
Yeah, you got to hold their hand while they buy. You can't just. Of course, Best Buy is doing all right. They're one of the few shining examples in retail that has kind of really turned themselves around. They were another one. They were kind of knocking on death's door a few years ago. They were being, mocked as Amazon's showroom. You go look at a TV in there, and then you buy it on your phone on Amazon. And then, people were saying some trends like VR and others where you kind of have to really try out the technology for yourself seems to have worked in their favor, as well as they've kind of refashioned their stores a bit, getting back to what you're saying, Mr. Rock Lobster, on the service side, trying to offer a little bit more service. I think they have a little boutique, almost shops within shops in Best Buy stores now. You can buy things like GoPros or other things like that. So they're trying to add that angle for things that you can't really get on Amazon, at least until Amazon has a brick and mortar store down the street. That's kind of the final step, isn't this, in the Amazon juggernaut, where they just have a giant Amazon warehouse store just down the street from everyone's house, and then their domination is complete. Then they've gone completely the other way, and then some new internet startup will come up and eat their lunch.
I guess so. But eventually Amazon will have such giant scale, nobody will be able to match it, maybe except for Walmart when they get their act together on the scale front. But that, I think, really is they'll eventually be a competitor just because they have such a massive footprint already. They probably will be able to match Amazon at some point because they already got the warehouses all over in front of everyone.
I'm just looking forward to the drone wars when they start, because once Amazon gets in the skies and then they have aerial supremacy, who can challenge them? What new startup? They'll have a handful of drones. Amazon's drones will just shoot them down, and it'll be just a drones falling from the sky, carnage. It'll be good stuff. It'll be Skynet version 1.0.
instead of Clone Wars, you got Drone Wars.
You got Drone Wars. So we're heading.
I'm curious if that would work though, because there's got to be just a lot of neighborhoods out there that just, not even for the Drone Wars, but just people in general just wanted to shoot those things down. Because think about it, if you want to be a thief, just buy a gun. If you see a big box flying through the sky, odds are it's probably going to be something valuable. Just shoot it down.
Just take your shotgun and blow it up.
Just shoot it and see what you get.
The only problem, though, is what are you left with when it hits the ground?
Well, I'm sure you got to come up with maybe some type of drone pad or something. Then maybe there's another business, drone pads, for when you shoot down the Amazon drone.
Exactly. Oh, hold it. You buy the drone pad from Amazon that you're going to use to shoot the drone that you're going to land the broken drone on. Oh my, the rabbit holes that we climb down.
I know they have delivered one thing, I believe, to one person in Britain who lived half a mile from their delivery center and had a specially large yard. And so they had approval to deliver one thing, and he bought, socks or something. So they had a drone. They have done one drone delivery in one very specialized and arranged location. But other than that, people are still waiting. We're waiting for these drone wars. I like your idea, Uncle Mike. People just instead of duck hunting, they're drone hunting. They're out there in their yard just shooting out drones, and they see what they get. Oh, we got socks. Oh, we got a flat screen. You never know. You never know what you're getting when you're shooting drones out of the sky. Interesting stuff. All right, with that bit of madness behind us, let's keep on rolling into more madness because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
everybody. That funky tune means it's time for the Odd Block, the funky portion of the show. The portion of the show where we break down what was rocking, what was rolling, what was moving, what was just weird in the odd. Not as weird perhaps as a shooting war of drones, but still somewhat weird out there today. Going to kick things off with a frequent offender here on the Odd Block. They've been on quite a few times over the past year, and who knows, maybe 2017. If energy stays on the forefront the way it does, chances are there'll be frequent offender going forward as well. This is Chesapeake Energy, ticker symbol CHK, closing today pretty much unched on the day, $6.93. So it wasn't net underlying movement that caught our eye today. More of some options activity. This thing does about 60,000 contracts a day, doing 132,000 or almost today, 15-1 calls over puts. That should give you some inkling of where we saw the activity. Yes, it was the puts. No, of course, I'm kidding. It was indeed the calls. Looks like a bit of a Jan-Feb time spread / roll, but doing it for some size. Was the Jan 8, Feb 8, and these are the monthlies, so expiring on the 20th of January and just the 17th of February. So straight up monthlies, no messing with that weekly garbage. And we saw initially going up, looks like paper buying Jan and selling Feb, doing it for a dime, 20,000 times to start. As the day went on, the size came into the total of over, just a little bit over actually, 50,000, nearly 51,000 on the Jan, and a total in the Feb range of 51,000. So yeah, about 51,000 total on both. Looks like closing here on the Jan, because there is some size on that strike, about 150,000 contracts outstanding there. So if this is all our friend, then he's got some more size to go. I don't have prices on the latter kind. Looks like they did a good chunk of it for that dime credit. Again, not big money, but this is a cheapy stock, so a dime goes a little bit farther here than perhaps in some other names. Interesting stuff here in Chesapeake. If you know, been listening to our show for any part of 2016, you know Chesapeake was a bit of a volatile name, kind of all over the place, spiking up to about 7 something, then selling off again down to 4, and then back up to about 7, nearly $8, and then back down to 5. And so it's kind of been a roller coaster year. If you're looking for a place for some volatility, for a little action, Chesapeake has certainly delivered that over the past year. Right now, it seems to have settled up around this $7 range, at least for the last month or so. Of course, these ranges are very short-lived out here in Chesapeake. But our friend here thinking at least for the next month or so, the ceiling is probably on that 8 strike, and willing to get a nice dime to do it, about 2%. Mr. Rock Lobster, what's your call here on our friend? Keeping the covered right party alive. We assume this is the covered right party alive here in Chesapeake.
Would you want to sell those for a dime?
I'm all over it, baby. 8 cents a dime, 6 cents. Hey, what the hell? Why not, right?
I think I remember probably there was a time where we would never sell anything unless it was a quarter.
The good old days.
A quarter was our low.
Eighths.
Had to be a quack.
Teenies. The good old days, sir. I wipe a single tear from my eye.
I know. But anyway, so people are rolling for a dime now. And not a small amount. There's 100, and the Jan open interest is 150,000 contracts. So somebody is trying to generate a couple of bucks. Rolling the 8. So they're not looking for a lot of upside, but they'll take what they can get. So I guess there's some yield there when you have your stock is only $7 and you want to sell something to make some money. I guess it works, but holy guacamole, Batman, that's not a ton of money to give away all that upside if you own the stock. Unless they bought it for $1.50 or $2 or however low it was when it was on death's door, which it looks like it is not anymore. So I would guess it's a right, but that's what I'd have to say.
Yeah, it looks that way, and you're right. Yeah, it does seem like maybe we're getting back in that range, Mr. Rock Lobster. It doesn't seem like that long ago in 2016, vol was pretty low, and we were mocking a lot of rolls for 7 cents, from Jan to April and stuff like that, There was a lot of that. There was an extended period, most of 2016 actually, where we saw a lot of that. Maybe we're getting back after that little brief flirtation of vol we had. Maybe we're getting back into that range again, where people are going to be rolling for. At least this is only a month. We saw people doing like quarters back in 2016 for like a dime at 7 cents. I vividly remember a 7 cent roll and us mocking it very very heartily. So yeah, who knows? I guess this is a little bit better than 7 cents. I'll give him that. But you're right. It's hard to get this guy is obviously a fan of his broker as well. He wants to keep those guys busy. Got to keep the broker employed. And he's doing that with 100,000 contracts for 7 cents, or excuse me, a dime. All right, moving on to it is auto time. The big Consumer Electronics Show was last week, and now the big Detroit Auto Show. Both actually big car events now, which is kind of interesting. Obviously, the latter primarily a car event, but the former becoming one as well. And we saw some activity out there in the auto sector, kicking it off. Mr. Rock Lobster kind of alluded to this earlier out in Fiat Chrysler land. The latest automaker to get caught up in the ongoing just emissions scandals, really just chopped the legs out from Volkswagen. They still haven't recovered from that. There's criminal charges being brought to bear now out in Volkswagen land. Others, I believe some Japanese manufacturers have been caught up in that as well. And now add Fiat Chrysler to the list of names of people who apparently were defrauding on the emissions front. We have to wait to see, obviously, the full scope of their level of fraud. But either way, the market taking a nice bite out of them today. Fiat Chrysler closing $9.05, off about $2 or about 18.5% on the day. So not a lot of love for good old Fiat Chrysler. This is the name that does about 7,000 contracts today, doing about 108,000 today. And surprisingly, Mr. Rock Lobster, with all this crush ho going on out here, that you'd think it would be all puts all the time. Yet it was pretty much 1-to-1 calls and puts. Of that 110,000, it was pretty much 55,000 puts, 53,000 or so calls. So pretty even paper, which is kind of surprising. But we did see some, not just size, but we also like to look at the timing of a lot of these trades. And we did see some fairly well-timed puts going up in good old FCAU. It was the regular Jan yet again, so the Jan 10 puts going up earlier in the day. Looks like paper goblin some up for about 15 cents. As the day went on, we saw, looks like a little bit more size. That was about 1,043. That was over on the Philly on just one block. As the day went on, good chunk piled in, about 25,000 total. The latter kind doing higher prices. These are kind of funky out there as well out here with these prints. So I'm not sure if my prints on these are. The prices where they went out are indeed correct. But yeah, they were trading 60. My screen has them printing at 35 cents. Stock at 905. I'd buy all those puts I could at 35 cents. But that's a conversation for another day. Obviously, the platform not well versed on synthetics today. Yeah, good size here on these puts going up today, and pretty just initial. At least that initial kind was very savvy. Mr. Rock Lobster, dive in here. What's your thoughts here on all this? Just the Fiat Chrysler in general and these puts, while I try to suss out what's up with my platform. Doesn't want to play ball today.
Oh, the Fiat is trading 9.95, right? And the puts, they started trading at a nickel. The biggest block I saw print was for, I think, that 15 cent type. And it's the classic. You saw a slew of activity in literally a 1 or 2 second time frame before the news came out. They actually had front run the news by a good 25 minutes, 20 minutes. And the paper paid a nickel, paid a dime, paid 15, just kept paying through the offer. Some of that paper was filled, and then Fiat just gapped down to like $9.50. Boom. And the puts went to 60 or 70 cents. And I guess that's when the news printed. So not a good day for Fiat Chrysler. Kind of a black mark. So we'll see what happens with all that, but not a good day at all. So 25,000 puts traded on the strike. So, and what's funny, they could go out worthless because we're only a nickel away with a week to go. But somebody clearly had a great stream of news. That's all I'm going to say there, because they got in front of this news by a full 30 minutes. So whatever came out, somebody saw it first.
I refuse to believe that, sir. Information leakage in this day and age, lies, and just more lies on top of it. It's like the St. Charles pickle capital, pure lies. I refuse to believe it, sir. This is just madness. Well, if that wasn't enough automobile madness for you out here today, we got some more for you in the terms of Ford Motor Company, also going out here today. Not really taking an immense drubbing, not feeling the love in that sense, even though they did dip as low as about 12.35. But we did see some interesting puts trading out here as well. Puts and stock, I should mention, so a little bit of a different beast. Ford obviously doing some paper, about 71,000 contracts a day, doing about 86,000 today. I haven't talked about Ford in a while here. It used to be one of our darlings, and it has vacillated a little bit between 12 and 14 over the past year, but hasn't been the sexiest of names out there. Perhaps our friend here hoping that's going to change. Within the next year or so. He gives himself a nice little time horizon. We got the Jan 2018 12 puts lighting it up today. Paper starting off buying about 5,500 of these for $1.32. That's that's a funky price. And then more of them piling in after the fact. Let's see if I can get 1 second while we scroll on down here, listeners. There we go. We got a total of about 5,700 and some change. So that was pretty much the entirety of it. And that one block over there on the Philly, we also saw paper, looks like buying some stock against that, about 236,000 shares. So pretty close to delta neutral on that. So maybe someone thinking there's another shoe yet to drop out here in these ongoing waves of emission scandals, or perhaps something else. Either way, he's expecting Ford to take off in some direction. At this point, he doesn't really care which. He's got his puts and his stock. He just needs Ford to get the heck out of Dodge, away from that 12 strike. Again, he gave himself a lot of time to run, so he needs Ford to run over the next year. And this thing has had, like I said, a decent range, nothing too crazy. Dropped to a low of about 11 and some change back in February when the market was kind of hitting its nadir as well. And then actually did flirt with that level back in November again, later in the year. But other than that, it's kind of been vacillating between like that 14 and like 11.5 range or so. So our friend here needing a nice little boost, nice little pop, or a nice little drop in Ford stock. And who knows, if this ongoing wave of emission scandals continues, then he may just get it. Mr. Rock Lobster, what's your thought here on good old Ford?
That's what I thought with that paper. Somebody's like, okay, well, you know what? Volkswagen, let's see, some Japanese car makers, Italian car maker, now with Fiat, American car maker. Like, okay, well, maybe there's smoke or there's fire, because I also saw it looked like closing paper on the June 37 put in GM. That one actually had some value, as far as I think somebody sold that put looking for income. And because there's a lot of open interest, and a bunch, I believe it looks like a bunch of those were bought back, like saying, well, maybe I don't like this news very much. Maybe that, 7% to June is not worth it. And I'll sell these puts at another time, since GM just went straight up over the last month or so. So not a great day for the automakers, and I think they're looking for, all the paper I saw was looking for a pullback. It certainly wasn't looking to get longer.
So you think they're closing here, that they actually had these on already, and they were just saying, I think all these shocks to the system are a little bit too much for us.
Right. I think the GM puts, although that's not what we really profiled, but the Ford puts could be as well. But they did trade these with some stock delta neutral straight up. So the Ford puts are, if they close them, which is certainly possible, but usually you kind of have that delta neutral as sort of an opening, an opening transaction. So we'll see but there's 80,000 open in those Jan 2018 puts, either closing or putting the back spread on. I think at the levels they are, it's just very, very inexpensive volatility. and we could see a big mess. As simple as that.
Speaking of big messes, go ahead, sir.
No, it's okay. All the papers point to the same thing.
You just gave me a perfect lead-in, because speaking of big messes, it's Thursday. Usually it's time for Uncle Mike, which would also be a big mess, but he did his dance on Monday, so instead it's time for you guys with the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. If you guys want to hit us up with some questions, you guys know how to do it. Hit us up at the website, theoptionsinsider.com, via social media at Options on Twitter and StockTwits. Make it easy to find us. A lot of you guys like to hit us up there, or you hit us up if you are streaming us live. Forgot to plug it at the top of the show. If you are joining us live via Mixlr, Mixlr, and you could find us there. Just search for Options, and you got us. And then if you're in the chat room, you can hit us up with questions. By the way, those of you, one guy's asking us about platinum options. It's probably the wrong show for that. I think I'll save that one, if you don't mind, until tomorrow for This Week in Futures Options, where we can get into some good platinum stuff. But let's hit it off with our question of the week. This one just roaring out of the gates. People got some VIX on the brain this year, because we put this out right before Monday's show, and it's just been lighting it up. People like to guesstimate themselves some VIX. We asked you guys, hey, VIX hit a high of 28 last year. How high will VIX get in 2017? Pretty straightforward question. A lot of interesting responses. Uncle Mike, you got to weigh in on Monday. Mr. Rock Lobster did not. He may have some interest in this one, kind of up his alley. Mr. Rock Lobster, we gave people the choices of about the same, so in the 27 to 29 range, slightly lower, so 24 to 26 range, slightly higher, so about 30 to 33 range, or much higher, which would be above 33. What is your vote, and also what do you think is winning?
I'm going to say people are going to say higher. I'm going to say much higher. That's what I think is winning, although that's not my vote. I think we're going to have a mild volatility year. I'm going to say 27, 29, about the same as last year.
So you think people are voting for much higher, but you think it's going to be about 27, 29. Well, yes. So far you are actually correct. Much higher, knocking it out of the park, sir. With about less than it was earlier in the week. It's some votes have come in on the Rock Lobster side since then. A little bit quieter, but yeah, still it was about half earlier in the week. Now it's about 42%. Still leaning heavily towards the much higher category, and then a number two slightly higher, 30 to 33%. So you add that up together, you got 2/3 roughly that are saying it's going to be north of 30 sometime in 2017, and then 18% for slightly lower, and then about 15% for about the same, 27 to 29. So an interesting question. If you haven't voted yet, I know a lot of you have. If you haven't voted yet, you got actually it goes into the weekend, so you got a couple of days left. You're lucky. But get your votes in at Options on Twitter. Unfortunately, can't do it on StockTwits, even though we do put the link out there. And so if you guys want to hit us up there and make your thoughts heard, feel free. And this next one is an interesting one. And I'd be curious, Mr. Rock Lobster, and also you, Mr. Uncle Mike, ye of pickle infamy, to get your thoughts on this. Like I said, I was at the STAC, which stands for Securities Trader Association of Chicago. There's an STA pretty much in every state in the country, and they have sub-chapters. There's STANY, STA New York, STA Florida, and this is STA Chicago. And they have a big annual conference, which has become quite an options-oriented event, as you would assume. For Chicago, like I said, I had the privilege of hosting or moderating their Dodd-Frank panel yesterday. What a challenge to make regulation fun and surprising and sexy, but I think we did a pretty admirable job. We might be able, if we can, get that audio for you guys here on the network, so you can check it out for yourselves. I know a lot of you can't make it to these industry events that are here in Chicago. And then today there was an interesting panel with on the retail side of the options fence. A lot of different players on that one. Everyone from NASDAQ to Dash Financial to a bunch of others, including our old buddy Steve Clausen, formerly of Option House fame, who's on the show many times, now of E-Trade fame, because E-Trade, of course, gobbled up those Options House folks. He was actually running it, and he put out an interesting comment, which I thought was interesting, and I also thought would get an interesting reaction, so I had to put it back out there. He said on the panel, customers are market makers. They don't deserve to trade on our bid. Also, market takers, excuse me. They don't deserve to trade on our bid. And so I heard that, and I knew instantly where he was coming from. And I'm sure, Mr. Rocklopster, you do too, because it's kind of in our DNA as current or former market makers to think that way. And I also knew, like I said, this would be very controversial, so we tweeted it out, and people were hitting us up instantly, including Ian Wagner here, who said he responded to that and said, this would seem to be a very profound statement. Can you discuss it on the option block? So let me tell you why I understand where he's coming from. And also, I do agree with him to an extent. That may surprise you. But when back in the day, we're going to go back now into the primordial ooze of options, even around Rock Lobster's time, maybe a little after that. So we had stone tablets by then. But of course, when you got on the floor of an exchange like the CBOE, the PCOS, wherever you were trading, as a market maker, you had a few things. You had that spread that you were making. You were making, your bid offer spread. And there's one thing about that you were kind of guaranteed when you got into this business, that spread would be sacrosanct in the sense that if you made an option one bid at $1.25 and a broker came in to cross an order, which is they had a bid and they had an offer and they wanted to make that order go up and pretty much take it down themselves, they had to improve they couldn't just do it in your face and cross it on your bid or cross on your offer. They had to make it, back in those days, it would be $1 and a teeny or something like that. So 1.0625 or something along those lines. They had to improve your bid or improve your offer and cross it somewhere there. And that was pretty much sacrosanct for the business until about 2000, early 2000s, when the multiple listing started happening. And then all of a sudden, brokers started coming in to the crowds and saying, what's your bid? $1 at $1.25 or $1 and $1 and 3 teeny, whatever the case may be. And they say, okay, I'm going to cross them at $1. See you later. And once I saw that happening, that's when I knew kind of the writing was on the wall for the traditional way of market making, and I started looking elsewhere for other things to do with my time because I knew once that went away, that protection. And that, I think, I know is what Steve was really referring to here. So I know it's a very controversial thing. Oh, I'm a customer. And I certainly see how the retail customer thinks too. Whereas, hey, I want to put my 10 lot in. I don't want to be behind 10,000 on that bid. I should get priority. I should jump to the head of the line. What they're saying here is that there needs to be some sort of reward if you're stepping in and making markets, taking the risk to be whatever, a buck bid in these markets these days, a buck bid at $1.03. If you're taking that risk, which making markets, that is a risk. You're putting out quotes like that, you're putting risk out into the world. You should have some sort of reward. And a lot of people still think that way, and I tend to agree with a lot of it, that market makers should have some sort of incentive. We've seen the other side of that where that incentive has gone away, and we've seen issues with liquidity as a result. If you look at the options market, we're seeing liquidity very much concentrated in the top 20, 25 names. Once you get, and even that is like front month at the money. Once you get beyond those and beyond those front month at the money ranges, that liquidity tends to dry up. And the reason for that is there aren't as many guys out there doing this and backstopping and providing those quotes. And it's because that protection went away. So I know the knee-jerk response to that is like, oh, this is a crazy town thing to say. Customers should always get in front of the line. But in this sense, there's a lot of talk about what we can do to reinvigorate, recreate in many senses, the market-making community. And this is one thing. So this is what I believe Steve was referring to. Mr. Rock Lobster, as another degenerate former market maker yourself, I'm sure you see where he was coming from. What are your thoughts on this quote? And, maybe I'm sure some of your retail clients will listen to this and take umbrage. What are your thoughts on that?
Well, the customer always got priority when they had that bid there. Even when we were market making, they put a bid in the book. That's where it traded. Yeah,
they had their 10 lot, but if they put it on your bid, you're right. They got that 10 lot, but they didn't get the 1,000 behind it or whatever.
Yeah, exactly. So that argument has gone on. I don't know. As soon as the exchange opened, as soon as somebody tried to cross something. So I guess it's the age-old thing. You don't need liquidity providers. But if you don't have liquidity providers, you don't have markets. So I think there should be a happy compromise somewhere. But I do think, again, we now that we're sitting on the customer side of the fence, I like being able to trade on the bid or the offer. So
degenerate customer, you.
When now I think it's a great idea. When I was a market maker, I'd say screw them. And I used to have a lot of arguments with brokers over this. Sometimes quite loud ones for hours. But ultimately, with multiple exchanges, it's going to go up somewhere on that price. But I think there should be some sort of happy medium. But you kind of have to feed the market makers somehow, some way, because that's how the liquidity gets up there. So, there will be some, there'll be, the reason why there are still floors open, at least, option floors, is because they like the service. The firms like the service of providing color and quotes when all else is not going well. So they also have to remember in their search to grab all of the commissions on the trade. Even as a customer now, I still, you're still, if you want to trade it on the best market, maybe you might to not trade on the market maker market. You probably should improve the price. So, if you're not improving the price, you're not doing much in the sense unless you're really providing all the liquidity. So. That's kind of what I say on that. I'm kind of ambivalent on the issue, to be honest. Although I think if you're going to put the trade up, you should improve the price over what the market is. So that's what I would say there. If you're expecting to get more.
Everybody wants to demonize market makers. I shouldn't say everyone. Pretty much everyone who's not a market maker wants to demonize the market makers. And since I'm on the show with two former market makers, since you guys are dissing my hometown today, I hate all you market makers. But anyway, but here's the thing. If we have no liquidity providers, then it's like selling a house in 2008. I remember just the personal experience I had trying to sell my house. Now, we made it through, and it was we lived through it, but it was a pain in the butt. But we had two houses for about a year, and it was a royal pain in the butt. And I kept telling myself, well, there's someone in this world somewhere that's willing to buy this house for this price. And we had to wait a year pretty much to get the person to buy that house. Right now, in the option world, in the stock world, in the futures world, all you got to do is click a button and it's sold, whatever you have. And so that's a nice thing to have. It doesn't work that way in private equity and real estate and that type of thing. There's no market makers for personal residences. So with that being said, I think we do need to come up with some type of a compromise, because whether or not you have your liquidity provider is like a traditional floor market maker, or whether it's some computerized thing upstairs, you still need to have liquidity, because if you do not have that, that makes life very difficult. So I am on the opinion that compromise needs to be met in that regard.
The great spirit of compromise coming from the pickle capital of the world. I should clarify for Steve, too, that he's mostly talking about, when I was referring to, is really like, the 1,000, 10,000 up guys who are coming to cross things on your bid. The on Agnes from Iowa with her 10 lot on the bid. No one's really going to take umbrage at her kind of maybe jumping to the front of the queue and getting her 10 lot. It's when, Goldman comes in saying, I want 10,000 there, that's where the problems really start. All right, let's, we were talking about Amazon before, Mr. Rock Lobster. We were saying, who can stop Amazon? They got these armed fleets of drones coming and everything else like that. Max here on StockTwit saying, well, Trump surely can. So who knows? Maybe he's onto something. Maybe Trump is the one who can derail. He's slinging these tweets left, right, and center and just knocking companies down 10% with every tweet. So who knows? Maybe he's got something in store for Amazon. What do you say to that, Mr. Rock Lobster? Can he defang the Amazon drones? Can Trump do it?
I guess if he wants to, but considering what is that going to be by executive order, there's not going to be any drones. I don't know, to be honest. Maybe he can. Who knows? I think we're giving him a little too much credit, though. Maybe a little too much credit.
Yeah, I could say that'd be an interesting drone war. They got a few drones in the U.S. Army, and Amazon will soon have their own. And there we go. Then Skynet is even closer to reality. All right, what we got here? We got you guys all over the place on these questions. I love it. What do we got here? We got. Is this our buddy here, RealRX? I'm not sure. We got it says in the chat here. It says, "Hey fellas, well hello." He says, "Heavy call buying out of the money in Bank of America." He says, in particular, the Jan 25.5 call expiring on the 20th. And my ticker, there we go. My machine would keep up with me. It'd be easier. And other bank stocks. Looks like protection against massive short sales since smart money usually buys in the money. He says, he puts in parentheses, could be wrong. Do you guys see this as a sign of bearish sentiment on financials with the dollar weakness, multiple rate hikes priced in, et cetera? It smells funny to me. That's interesting. Maybe get the latter part of that first. Smart money usually buys in the money. I don't know if I really agree with that statement. We outline a lot of quote unquote smart money here on this show in the unusual activity odd block sector. People, when they know something, they usually they could go in the money, but usually they go a little bit out of the money where they're going to get a lot of bang for their buck because the option is cheaper, it's out of the money, the leverage, the return on capital there is just going to be orders of magnitude more than if you even go a few bucks in the money. Why outlay that much? You might as well buy the stock. If you're going to go out of the money, if you have this inside information, you know where this stock is going, you can do some quick math and say, if it's going, it's going to gap up 20%, I can go a few percent out of the money and make orders of magnitude on my money rather than go in the money and make 100% or something like that. Might as well go that route. So I would maybe take issue with that. I don't know, Uncle, Mr. Rock Lobster. Have you noticed this out of the money call buying? He's speaking of here in Bank of America in particular. See if I can pull it up while we're speaking here. The Jan 25 half doesn't seem like there's much going out there today, but there are 35,000 open, and there's like about 123,000 in open in the Jan 25 regulars. I don't know what you say to this, Mr. Rock Lobster. You think this is you buying into this? You think this is dollar weakness? And what do you think about pros buy in the money?
Pros buying in the money, I don't know, maybe. Usually it's too expensive.
Exactly. You're trying to get most bang for your buck.
Yeah, usually they're going to buy gamma. They're not necessarily going to buy the deltas. So they're going to buy stuff at or just out of the money. Also, this strike, it doesn't look like anything particularly great as far as purchasing goes. Maybe it was the 22 halves. I don't know, just for today. Or the 23s. I'm not sure anything looks super interesting on the 25 and a halves. But I think it feels like anyway the rally in banks are it's gotten tired for a while. Even Goldman's not going up anymore after its $45 rally. So, that's what we got. So I'm not so sure about bank going to 25. I guess it could. Does have earnings in a couple of days, so we'll start to see what happens. But of course, we're having earnings before any new changes to the laws come around. So we'll see what happens on that.
He clarified in the chat that he meant for short term.
Okay.
He said the paper was out of the money, 11% out of the money calls expiring next Friday. Made me think that it wouldn't be an outright bet on a huge move. I'm not sure why you think that. If they're loading up on out of the money calls, they certainly want a huge move.
Yep.
That's kind of what you need to make those make sense. But yeah, Bank of America, others, you're right. They kind of have had their run. Goldman had their run. Hey, Goldman's got presumably the next Treasury Secretary, so they got what they want. Some people were lamenting about that in the conference today. Once again, overrepresentation of Goldman on all these appointments in the financial realm. But that's a conversation for another day. Good questions, everybody. We got more. Maybe we'll do a special odd block. Oh, real quick. You got a comment here from the real Justin. He says, I'm thinking gold will continue to run up to the inauguration. So there you go, Uncle Mike. There's somebody in your neck of the woods. Are you buying what he's selling here about gold running into the inauguration?
Yeah, I could see that, but right now, I think I like silver better just because of the way that the options are positioned. I talked about that on the strategy block and previously this week, but I would definitely agree with that. I think that there's a lot of upside with gold, not just for the next week, but I think also for the next couple of years.
Of course, we know you're a hardcore silver man, Uncle Rock Lobster. You missed Mr. Uncle Mike's epic silver trade. He's going to be outlining for multiple years here, so you'll have to catch up on that one. It'll be kind of interesting. Meanwhile, it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Not too much cooking here for the rest of this week. It's next week where it seems like a lot of the eyes are being drawn. And then beyond, of course, beyond, we have earnings coming up with Alcoa, I believe, kicking it off on the 24th. So we got about a week and a half till those bad boys really start rolling in. Of course, on the 20th, we have the big day. That's when Mr. D takes over in the White House, and we'll start to see how all this campaign rhetoric translates into the real world, which is always an interesting question. So a lot of people, I think, keeping their eyes on that, which is Friday, which is kind of an odd time for a inauguration, but c'est la vie, should be interesting. Uncle Mike, we'll start with you. What are you keeping an eye on, if anything, this week, and then next week, all the way up to the inauguration?
Dow 20,000. I think that's the only thing that there is until what you had mentioned. Like I said earlier in the show, I think there's not a lot going on now, but in the coming weeks, there's going to be a lot going on. So I think this is going to be an exciting year for a lot of things. But then in the meantime, I think we can just watch and see. Maybe we can get the Dow 20,000 again, or maybe make another run at it and see if maybe we can get over the hump. So we shall see.
You're watching for that hump, sir. Mr. Rock Lobster, are you also watching that hump, or are you fixated on all things Trump? Hump or Trump?
Hump or Trump?
You know, I've been debating about the 20th of January as being sort of the watershed for the market, you know, because ultimately everybody's like, okay, it's going to be different. It's going to be different. And then the 20th is going to come, and, you know, and good or bad for the Republic, things don't change that much. Which is probably good, since for the most part everything works, and mostly presidents just screw stuff up anyway. So we'll see. But after the 20th, there will be no more. The fantasy will become the reality for some people, and the nightmare will become the reality for other people. But either way, he will be president, and that will be that. So, but we might see. Can we see 2,300 and 20,000 Dow on the 19th? Let's say that. That's where we'll be. So I'm guessing whatever route this rally has, that's where it goes.
Unfortunately, though, we have to go as well. That music means it's time to draw to a close this epic journey, voyage, adventure through the world of options. What a journey it was. We started off talking about VXX and some of the few interesting moves we saw in the marketplace, getting into some unusual activity over there in the automobile sector, as well as our old friend, frequent offender, Chesapeake. And then getting into a bunch of your questions, which were all over the place, which is pretty much exactly the way we love your questions. Keeping us on our toes. Keep those coming in, and we'll keep hitting as many as we can on every episode. Of course, wrapping up with keeping our eyes glued to the future, including the inauguration of one Mr. Donald Trump, former reality TV star, now turned president-elect. So, interesting stuff on the horizon. And one last time before we go, let me check back in on my cohorts, my partners in many, many crimes, starting with you, of pickle infamy. Uncle Mike, what's cooking in the land of RCM Wealth Advisors?
Well, broadcasting live from the water garden capital of the world that I just learned. If you are looking to work with a financial advisor, feel free to give me a call, 312-212-3531. And if you want to learn a little bit more about me, buy my book. It's for less than the cost of a Starbucks. And you can go to Amazon. It is Go Long, New Option Strategies for Buy and Hold Investors. It's the updated edition from the one that I wrote several years ago with additional chapters on portfolio margin and weekly options.
Oh, new chapters on weekly options. By the way, I have to take umbrage at your repeated capitals of the world. How many capitals of the world can St. Charles be?
Well, just one right now. We switched from pickles to water gardens.
Water garden. Talk about reaching. I'm not even sure. You're talking like, koi ponds? What the heck is that? All right,
Come to my town and find out.
I guess. Mr. Rock Lobster, you know nothing about water gardens because your rink is pure water, so ice rink. So what's cooking in the land of option pit?
Can't talk about it. Our vol masterclass next week. You want to learn to trade volatility in vol products, not lose money like a goofball, although we cannot promise anything. you'll at least learn how the products work. And once you learn how something works, you have a much better shot at making money with them. That's all we'll say about that. You'll see how they work. Starts Tuesday.
There you go. He can't talk about it, but it does start Tuesday. Optionbit.com to learn more. And everyone else have a good rest of this week. If you are going to join us tomorrow, remember Volviews at noon. And then Twifo at its new time here for 2017, which is 1:30 p.m. Central. So noon Central for Volviews. And then keep yourself occupied for a little bit. Come back right at 1:30. Moved it up a little bit just because I think make it easier for you guys on the weekend. You guys, we were doing it at 3. It was a little late for you guys. You want to head out for the weekend. So we understand. So we're moving it up a little bit earlier. So Volviews at noon. And then Twifo, 1:30 p.m. Central. With our new friend CME on that show. Should be pretty interesting. Stay tuned for that. We'll see you tomorrow for more fun stuff from our network. And next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.